You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike TOSAW from RCM Asset Management, Andrew the Rock Lobster GIOVINAZZI from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That rockin' bit of tunage means it is time to rock out once again with everyone's favorite bi-weekly source for all things options related. Yep, it's that time for the option block. My name is Mark Longo from the Options Insider, all of our various outlets, the website, of course the network, the various email, all sorts of other fun stuff, the social medias, all that good stuff, the mobile app. You can get us pretty much wherever you like to get content. We got something, even on YouTube, even though we don't really put stuff out there. It goes out there anyway, automated style. A lot of you guys like it there too, so if you like the old YouTubes, we got something for you there as well. Just follow along, which I know a lot of you are doing and liking. So enjoy it. However you get that content, make sure you hit us up. Questions, comments, insights, pearls of wisdom. We do indeed enjoy hearing from you guys. And let's see who else we're hearing from on the old all-star panel today. Let's go out to the hinterlands of these fine United States. Once again, trying to wrestle the title of the head of option searches back from that pesky Washington, D.C. Yep, we're going out to Maine, where once again we are joined by the rockingest of lobsters. Maybe someday again he'll be the cold water lobster. We shall see. He is Andrew GIOVINAZZI from OptionPit.com by way of Carmeline Capital. Mr. G, welcome back to the show. And I heard a little birdie told me you had a little webinar this week. How did all that go, sir?
The webinar went very well, and I still think that whole Google search thing for Washington, that's all total crap. I'm not buying any of that.
There's one senator, and he's just Googling options nonstop.
I know. Yeah, I'm sure he's Googling something nonstop. But our webinar went, oh my God, best webinar ever. Lots of excited folks, and hopefully things will go as they have historically, which is pretty decently, and people will be happy with what they got. So very exciting, very exciting.
Very exciting indeed. We are also excited to have the Permabull with us once again on the old program. He is Uncle Mike TOSAW from a little place called St. Charles Wealth Advisors. Uncle Mike, welcome back to the program. To you as well, sir.
Always happy to be here. Very exciting today by all means. And I don't know, it's so exciting, it's almost boring. It's kind of like when the Chicago Bulls won all those NBA championships. It's like, oh, yay, another championship. Big deal.
Another championship indeed. We'll see. Maybe we can win some championships as we keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. This is indeed the portion of the show where we break down what the heck is trading, what is lighting up our collective tapes out here. Coming into showtime, apparently the trade war, a distant memory, a relic of a bygone era, a thing that it belongs in the dustbin of history, because we're past it. We're moving on up. Of course, we signed that deal, a limited phase 1 type deal. People have already started to pick apart the various details of said deal, but nevertheless, markets liking what they're seeing, rolling on up, most of them up about 0.6%. In fact, the Dow and the S&P both up about 0.58 exactly, and the NASDAQ taking the lead up about 0.2% over there. And of course, all that green on the screen means VIX cash taking a bit of a break. Not a ton of a break, though, about 12.25. I'll have to go check in. I think that's looking pretty good for my crystal ball. Because I was even saying to the Rock Lobster, I said last week, I think we're going to have a hard time, breaking through that 12 handle. And I think my volatility crystal ball pick reflected that, but we'll get to more of that tomorrow when I ring the bell on yet another victory. I'm getting ahead of myself, so let's not get too optimistic yet. Of course, a little bit of mixed bag on the commodity front as well. Gold off a little bit, right around the 15.50 handle, and WTI a little bit shy of the 59 handle, about 58 2/3 out there as well. If you like more of that fun stuff, stay tuned. We'll be doing TWIFO shortly after this program, about a half an hour after this program. We'll have my buddy Sean, maybe some others, maybe some old friends joining us on TWIFO here in the studio, so that should be fun. But that's coming up down the road a little bit. Let's get around the horn, what we're seeing right now. VVIX, our old friend, the volatility, still frothy, right around a 90 or so. So not quite threatening the triple digits, not quite threatening the 70 handle either. Nice and a little bit of froth to it, right around 90, I think is a fair characterization of that level. VXX continues to give up whatever ghosts it has left. It's down to about a 1340. That puts it off about half a handle from where it was this time last show. And let's see. Actually, I'm sorry, that's up a little bit. That's up a little bit from last show. And then we'll save the most actives for a little bit. Let's go around the horn first. Let's start in the land of St. Charles. Uncle Mike, sir, what is lighting up your tape, sir, on this day of mild enthusiasm?
All right, I gotta say it again. Never before in the history of the entire market has there ever been a better time to sell than right now. It's like I said, it feels like we're back in the 90s in Chicago again. The Bulls were just so insanely good back then that they became boring to watch because they were just too good. I don't know if boring's the right word for it, but it's like almost what you expect right now. That's how hot this market is at this stage. So, it's the VIX still stays at the 12 level. We're still not in the single-digit VIX mark. The Dow's above 29,000. That's definitely a key number. And so now the Dow can I know it's not a huge thing with large institutional money, but I think what a lot of the financial media will be doing, and as well as a lot of the retail traders and investors are going to be taking a look at what the Dow's doing to see if it goes close to, or see if we can hit the 30,000 mark this year. Hint, hint, I think we will. But anyway, I'm getting ahead of myself. But on there, the other things that I think are kind of noteworthy right now is that just about a week and a half ago, we basically declared war on Iran without declaring war on Iran. And Iran... there's that plane where the 100 people died that people are blaming Iran for, and we're still at all-time highs right now. So there's a lot of strength in this marketplace, and the fact that we had a little bit of a bump up in the shiny stuff, and by the shiny stuff I'm referring to silver, we had that bump up about a week ago, but we came right back down. It's telling me the market's really not that scared of everything that's happening right now. It seems like the market's saying, I ain't afraid of no war. And so we have that, combined with the fact that we have earnings coming up. We have phase 1 of the China deal, so taken care of. So, of course, my prediction did hold true, and people from CNN typically said, oh, it's a terrible deal. China's the only winner in this, and Fox News says it's a phenomenal deal. So that did hold true. But here's the interesting thing about the China deal, and that is that within the China deal, it's just phase 1 of it. So the beauty of the Trump presidency, if you're an option trader, and he's been my all-time favorite president to trade by, not trying to be political, but in terms of how if he'll say a tweet, the market moves, and then the market dips, you can buy the dip, and then you make money on it typically. That's kind of been the pattern I've been following the last few years anyway. But the beauty of that, what I'm excited about, is that there's still more political mumbo-jumbo to come. So if all of a sudden we get a little bit long in the tooth in the market and the president feels we need a pullback, he can put out some tweet saying, oh, the phase 2 of the China deal might not happen right away. Market goes down. At that stage, then it can be an opportunity for a little bit of rebalancing of portfolios or an opportunity to sell some put spreads because the world's going to end at that point because we're not going to get a China deal. Tariffs are going to be higher and everything's going to be awful. So we still have that. So as a trader, I got to be honest, I'm really excited about that. Whether or not it's the right thing for the country or that type of thing, that's a topic for another day. But as a trader, I think that's going to be a lot of fun, quite frankly. So with that, that's what I am looking at right now. And that's what's lighting up my tape at old St. Charles Wealth Management.
All right, now let's toss our attention to a man trying his best to do his best Darth Vader impersonation. Yes. It is the Rock Lobster himself, Mr. Rock Lobster. When you're not busy, sounds like you just ran a marathon, sir. What is lighting up your tape over there in the land of the pit?
I have to admit, I got to be honest, I wasn't running a marathon. I was putting. So I just
well, there you go. Very active. That's a high intensity aerobic activity, putting.
Unfortunately, now that I'm old, yes, it is. And I think that's the Apple ear thing. So clearly I don't have those. I got to get some of those fancy earbuds. So as far as, one thing, I know that the Spikes are a supporter of the Option Insider Radio conglomerate, global conglomerate. And I'm noticing a little divergence in Spikes and VIX today that I find as a watcher of these things, because, it's a full life. Watching things tick on a little blinky screen, it's a full life. I just want everybody to know that. Where VIX, so here's a couple of things I find interesting from a divergence point of view with vol. 9-day vol is 945. So the VIX 9-day calculation where they do the whole strip at 9 days, 945. VIX cash, 1226. In itself, I haven't seen that separation in a while. So the short-term vol is just getting real inexpensive. But as you notice, Longo, spikes are actually down a full $1 today, and VIX is down 16 cents. So, of course, on vol views, I want to find out why that is tomorrow.
Well, I have good news for you. Mr. Simon Ho, the Spikes father himself, will be joining us, so we will get the word straight from the horse's mouth.
Is Spikes going to be a little predictive of the hold-up in vol coming in VIX? Because, like index trading, SPX, it's harder for VIX to go down if we keep going straight up and they keep kind of pulling that out the money vol up. It's hard for VIX to drop like we normally expect because we have this just relentless rally, right? So there is that factor that keeps VIX from getting crushed because we keep going straight up. It doesn't stop. It's good for all equity holders, but if you're looking at vol or you watch these things, you're like, wow, it's getting stretched. Let's put it that way. We could go up another 50 handles in SPX. I have no idea. But that's the reason why vol at VIX can't go down. There's not a break. So the curve gets pulled up and it keeps VIX from going down. However, 9-day vol is 944. It's pretty low. And I'm trying to think I'm looking at a chart of 9-day vol right here. And I'm going to say that we are at about the lowest level we have been in the last year for that number. So 9-day VIX, we are, and it doesn't stay there very long. So all you home gamers out there, that have a chart of VIX 9-day, look at it. I mean, like, whoa. Every time it's touched this level in the last year, it hasn't stayed there for more than 3 or 4 days. So as much as I like the rally, because, of course, my 401k loves the rally going up, and my retirement account, like, woohoo, I love it, I love it, I love it. We are at an inflection for that 9-day number. So I'll put that out there for everybody, and then all the haters can put something in Twitter or something like that and say, oh my God, Andrew, you're all like, you think the market's going, whatever. And really what I'm saying is we are at a spot that we just haven't seen in a very, very long, in a long time. And historically, it's had a hard time staying at this level. So in order for us to get to the single-digit president, we need to break through that. That 9-day vol has to start looking at a very low number. And we're close. So for all those watchers, that think that the vol products could break a little lower, or how low they can go, or if they have some sort of support resistance thing or whatever, we're at the point now where it's pretty low. But this is also the spot it needs to break through in a meaningful way. And if it does, it's probably, I would say pretty bullish. So anyway, we're sitting right at that crux, right? And like you were saying, are we going to get another tweet? We don't really have any trade deal tweets. We don't really have the Iran thing. And, and we're waiting for earnings, and the bank earnings were pretty good. So usually that's a bellwether. And also, too, historically, vol tends to drop through earnings cycles when they start off good. So those are what I'm looking at. And if spikes is a little bit of a bellwether for VIX cash, that is what I'm looking at from an interested point of view at this point.
Yeah, it'll be interesting to see what the Spikes father has to say about that tomorrow. He'll be joining us on Vol Views, same bat time, same bat channel, listeners, 1 p.m. Central, 2 p.m. East. I know it's a little later than it used to be back in the day, but we do that actually to try to accommodate Simon's schedule, because he is beaming in from far across the pond, and we try to make it so he doesn't have to beam into the show at 1 a.m. Sydney time over there. So try to make it a little bit more palatable for him. So yeah, it'll be interesting. You're right. Spikes hovering right around that 11 handle right now, actually 11-12. So your prediction on a vol front, Mr. Rocklops, looking a lot better on spikes than it is on VIX. But we got another 24 hours or so for the pot to stir before we can declare a victor one way or the other. Let's see who's winning out there in the options activity today. Looking at the indices, a fairly decent day, actually, all things considered. VIX closing in on its ADV right now. It's at about 384,000 contracts as of a few minutes ago. The ADV is a little bit north of 400, about 420. So not a bad day for VIX, all things considered. SPY a little bit less, at least in relation to its ADV. It's at about 1.65 million. The ADV is about 2.6 million, so got a ways to go out there. The S, 765,000 contracts. The ADV about 1.2 million. The Q's at about 325,000 contracts. The ADV is about almost 550,000, so a little light out there as well. And the IWM actually lighting it up as of right now. IWM, of course, the old Russell 2000. Let's get up to the second number for that. Actually, 408,000 contracts out there. So Russell 2000 moving and shaking and lighting it up. The ADV is only a mere paltry 284. So it's doing way more than the ADV. I'll have to get Sean. Well, Sean will be in here in about an hour or so. So I'll have to ask him directly. I know he's more on the rut side, but IWM, a flavor of the Russell 2000s. I'll have to ask him why that one is lighting it up out there today. Let's go out. Speaking of lighting it up, let's see what's lighting it up in our top 10 individual equity options out there. The single names you guys love to sling as well. Cost you 115,000 contracts to break into the top 10 today. That gets you to Facebook. 115 for number 10. Number 9, good old Roku. Just kind of a perennial top 10er now. He refuses to go away. 118,000 contracts there. Number 8, good old Amazon. 127,000 contracts. Number 7, good old Bank of America. $1.46 on the tape. Number 6, Softy. Softy back in the top 10. 161,000. Number 5, Neo. Also back in the top 10. NIO, of course, listeners, 162,000 contracts, just barely managing to edge out the old softy. Number 4 is good old MS. Not a name we see in the top 10 very often. Of course, that is probably due to what time of year it is. It is earnings season kicking off, and we know when earnings season kicks off, we get some financials. So that puts good old MS, a.k.a. Morgan Stanley, in the top 10 at 174,000 for number 4. Number 3, then we jump up quite a bit. Number 3, AMD, 399,000 contracts. So just blowing the doors off everything from 4 down. Number 2, Tesla, still clinging up there to the top. Pretty close, 455,000 contracts. That's usually good for the number 1 spot, but not, I think, today, listeners, because our old friend, the fruit company, continuing to cling with a death grip to that top spot. You know, Tesla knocked them off quickly, but Apple right back on top, 518,000. I often wonder where the heck the brokerage industry would be if it wasn't for Apple. It does so much paper. Take that off the tape, and you lose a lot of the darts that go up on just about every brokerage platform out there. 518,000 contracts, $313 is where it's trading right now. Pretty much exactly up $1.65 today, up 0.5%. It's not a huge move for them, but enough for the number 1 spot pretty firmly. The aforementioned earnings, let's get back to that a little bit. Obviously, it's been a pretty heavy financial week. JP Morgan Chase, Citi, Wells Fargo popping off on Tuesday along with Delta Airlines. Yesterday, we saw Bank of America, Goldman, BlackRock, PNC, U.S. Bancorp, and the old stalwart Alcoa popping off yesterday, Thursday, which would be today. We're seeing BNY Mellon. We're seeing good old Morgan Stanley, hence their appearance in the top 10. And our old friend Schwab making a lot of headlines out there of late. We'll see how all this merger/takeover, if that rumbles to conclusion without any sort of holdups. We'll see. It's a pretty big deal. And then Friday, of course, we got Citizens Financial and State Street. So if you like your financials, this is a good week for you. Of course, we've got a lot of earnings move and earnings move results reports for you over there at theoptionsinsider.com. All free of charge, courtesy of our friends over there in Orats land, ORATS. Check them out. If you do, you'd see that they're profiling also some high volume names today as well. They're doing a lot of interesting stuff over there in Orats land. According to them, Wells Fargo, second highest volume versus its 20-day average. That's a ratio they like to look at. It's about 4.3x right now. So Wells Fargo lighting it up. There was 239,000 options on the tape as of the time of this report. So Wells Fargo lighting it up pretty well. Morgan Stanley doing 76,000 contracts. They're at about 2.7 times their 20-day average out there as well. So also doing well, but not quite as well. iRobot, they have Roomba fame. Also looking pretty good at 2.2 times their ratio there. 15,400 contracts on the tape. All that stuff and more available for you. TheOptionsInsider.com. Breaking down. Let's do a quick preview of an earnings move. We've got a new one out there for Delta. Delta's this week for Southwest, aka Love. Coming up next week. At the time of this report, they were trading pretty much $55 even. Market was pricing in $1.73. I was actually looking pretty light because in the past they've averaged about $2.50 worth of movement. So nice 75-cent delta out there. Might be worth checking it out. Delta. I got Delta on the brain today. Love, a.k.a. Southwest. Check it out over there. TheOptionSinsider.com is the place to get that earnings move report and just about everything else out there. Let's keep on rolling, though. It's time to get weird. It is time to get wild. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by TheOptionsInsider.com. It's time for the Odd Block.
All right, let's get to it. Welcome to the Odd Block, the portion of the show where me and Darth Vader over there like to break down some weird and unusual options prints. Let's kick things off. You know, when you're thinking of hot options names, a few come to mind. Probably your Apples, Tesla these days, maybe your Rokus, maybe, of course, you like your SPYs and your VIXs. And, of course, you got to throw into there as well Unit, ticker symbol UNIT. This is the Unity Group, Inc. This is a REIT. A lot of REITs on the old Odd Block of late. Maybe there's a sign in there somewhere. Interesting stuff. This one, if you're wondering, trading $7.95. They're headquartered in Little Rock, Arkansas, if you are interested in such things. Trading, like I said, $7.95, off about 42 cents or about 5%. So not a great day here for good old Unity. I'm going to go out on a limb and say maybe our eye ups are on flag. Some puts, we'll find out. A year ago, they were looking a lot better than they are right now. They were about $19, so more than 2x of where they are right now. And it looks like they peaked around $20 and change. That was in the February time frame, and then they just fell off a literal cliff on this chart here. It went from $19.86 on February 13th. By the 5th, what's the date here? By the 22nd, so about a week later, they were trading $9 and change. So they just got annihilated, obviously, in earnings or some announcement earlier this year that really clipped their wings, and they kind of been vacillating in that range ever since. They got back up to about $12, and that was in April, so a little bit of a rally back after that immediate wing clipping. Then they kind of been slowly draining. They hit their low of the year. It was like down around November, around 5.25, so pretty low. They bounced since then, obviously. They're threatening $8 right now, but still. Interesting times here for this REIT. Like I said, I'm feeling puts, just looking at this chart and what's going on today, off 5%. And that appears to be the case, Mr. Rock Lobster. We've got, looks like some longer-term puts out here. We got the Jan 2021 5 puts. So this Jan, no good for him because that would be going away in a few days. So not a lot of real protection there. So he's going to go out a year, all the way out to Jan of next year. And he's getting in on the 5 strike. And he's paying 82.5 cents to do it. This was opening over there, looks like on Arca. And let's see, next earnings are on the 2nd of March. So obviously there's going to be a few cycles baked into this year-long contract. So this guy stopping himself out effectively around $4.20, which is about $1 below the 52-week low. So interesting choices here across the board, Mr. Rocklobster. Choosing to go out this far, choosing a put strike that, shall we say, not exactly relevant, and yet still paying a boatload for this quote-unquote protection. So at this point, the stock's going to get pretty much cut in half before this put really has any relevance for him. I have a feeling I know how you're going to feel about this one, Mr. Rock Lobster. What are your thoughts on this longer-term put love here in Unity Group Inc.?
Well, as an old market maker, you love it when you see something trade 82.5 cents, and then it does
warm the old cockles, does it not?
It does. Like 82, and then you see the liquidity providers afterward offer them at 80 cents in your face after somebody just pays $5,000 for
that's a big FU to this customer.
Yes. I remember brokers when I first started, they come screaming across the floor, literally, like wanting to pull your ears off and shove them down your throat. I just paid $75 for these, and you're offering them like 3/4. You're offering them at 5/8 now. You are a freaking jerk. You know?
Yep, move that offer. Get that up. Yep. Or adjust.
And, that of course, that used to be the repartee when you got cut out of the 3/4 count. All right, buddy, screw you. I'm at 5/8 now. So this is happening, but it's all happening electronically. So, I don't think there's quite the anger and animosity.
Yeah, the screw yous are all digital. I think you have a button now that you hit that just says screw you.
Yes, just the angry button. Like, you push the angry button. Why is this, again, somebody wants to protect their stock, when it's already kind of in the basement. I like the sell put side of this for just a 1-year yield is pretty good. What is that, like 12, 13, 15%, something like that?
Yeah, it's fairly juicy.
It is fairly juicy for 1-year hold. Like, that's 1 year, 15%. You don't do anything. I think almost anybody said, okay, well, you definitely have risk, but I just get to do this for 1 year and I don't have to do anything. I can see why somebody wants to offer them at 80 cents afterward, to be honest. So, what the customer is doing, unless they have some big, and all these REITs look like this. I mean, haven't we seen this too, Mark? Like,
yeah, there's been a ton of REIT paper of late. Usually it's with malls, shopping mall REITs. I don't know what this REIT and what they invest in, but it has been a ton of REIT paper of late.
Yeah, and it's all been, kind of bottomy, and I haven't seen it yet in the oil stocks. I'm kind of waiting for it. But this is one where you're like, oh, okay, it is real estate investment trust and infrastructure in the communication industry. Maybe they own towers and all that kind of stuff. You would think there's money in that. Fiber infrastructure, all this. So just maybe they're just slamming all of these. I don't really, again, I don't have the whole, the whole deal on this company. But it looks like a lot of them just in the basement. People not really looking, not looking kindly at it. I like I said, as a bottom feeder on stuff like this, I like the put sale. The stock's down a ton. But on the buy side, it's, unless you're buying a ton of stock with it, it doesn't look like there's a lot there. That's all.
Yeah, this is a tough one. I'm not even going to mark it as to be watched because A, it's a year out, and B, I got a feeling this trade's going the way they do. Knowing our audience the way they are and the way I do, I got a feeling most of them would be on the other side of that trade as well. If I had to pick one, there's a lot you could do between 8 and 5 to hedge this thing. I don't, unless this thing pulls a biotech and just gaps down, which it did do earlier this year, to be fair. So maybe that some of that put juice is warranted, but still, that's a hefty price to pay to stop yourself out at effectively what is about half the value of the stock. I think you could do a few other things. All right, maybe move that put up a little more relevant, a little bit closer than do a put spread, so you get a little bit tighter protection there, and it still have a similar, maybe hopefully less outlay. Interesting, a lot of things you could do there, but hey. This is not the trade structure hour. This is the odd block. Let's keep on rolling here, find some other weird stuff. Let's go on. I just mentioned a biotech. I must have invoked them because that's what our Eye of Sauron has up for us next here. This is Moderna Inc., ticker symbol MRNA. This is the biotech out of Cambridge. So they're doing a lot of hot and heavy biotech stuff, probably with Harvard research there, focused on drug discovery and development based on messenger RNA. So there you go. Trading right now about $21, even up 81 cents, nearly 4%. So a decent day here for Moderna. A year ago, they were trading 16 and a quarter. So they're up a bit from there. Their 52-week high looks like it came in May, right around almost $30, 29 and change. Pretty good. Then they kind of got clipped after that May high. They sold off pretty hard. By June, they were trading $13.70. So they got clipped pretty good. And then they kind of vacillated around there, bounced back up to almost 18 in September, sold off again to 13 in October. Kind of did that dance for a while, back up to 20, almost 21 in December. And they kind of been hovering around this level ever since, right around this 20 to 21 level, which is kind of where they find themselves right now. Not quite at, but near the upper portion of their 52-week range. And what did our Eye of Sauron find for us today? We found, looks like, someone deciding that rally may be a little bit quiet in the near term here. A little bit of overwriting going on, looks like here. It was the July 25s. They got these are juicy. The July 25s. This is that's going to be our theme of this odd block, Mr. Rock Lobster. Juicy options. The July 25 calls went up nearly 5,000 times, 4,950 times, for $2.65. These are nearly four handle out of the money calls for July. Granted, it's out to July, so it's about half a year, but still, 265. I don't have the vol on that right here, but that's about 64%. So it's a pretty juicy level. This print went up late, so maybe take this with a grain of salt. But it looks like these are pretty wide, obviously 250 at 290. Looks like they probably overwrote these. Let's see, these are 16% out of the money. Next earnings are on the 4th of March. So there's going to be at least one cycle between now and expiration. Maybe that's why some of that premium is in there. By the way, Mr. Rock Lobster, kind of a similar tale on the other side of the fence. Now we got an upside call sale and getting a pretty juicy level here. What do you think of this guy selling some upside here in Moderna Biotech?
You would have to think this is an overrider of some sort.
One would hope.
Like
if he's buying this, he's got the same problem our other friend does.
I mean, let me see, is there any borrow issue in the stock? 70. I mean, there could be, there could be a little bit of a borrow issue in here. So, that's possible. I'm just looking at the option pricing. It's not totally clear, but you look at this and you're like, I think somebody's trying to write some calls. Again, you're at the 10% level out to July. You get up there, you don't really have any problems. You made a lot of money on your stock, plus you made 10% on your calls. It's like one of those things where, okay, so what are you going to do? Be happy with unhappy with the 25% gain or more up there? You're pretty stoked. So I think it's perfectly reasonable for a long holder to get taken out there and be happy, at least in the short term. It looks like the stock does have sort of troubles getting out of those mid-20s. So it looks like a very reasonable, very reasonable. I think we almost need TOSAW here. It's like a very reasonable buy right to generate some dollars.
Yeah, I like this one. I'm going to put this in the to be watched category. This guy's getting a decent amount of juice. I mean, it is a biotech, so you expect a little bit of juice to be squeezed out of that upside call wing, and that's pretty much what our friend here is doing. So I'm going to put this in the to be watched. I want to come back and see how our friend fares here in Moderna. I got a feeling he's going to do all right. And if he does get called away, like Andrew said, he should be freaking happy. He's doing pretty well. Unless this thing, of course, like some biotechs can, it quadruples, then maybe he won't be so happy. But outside of that, he's getting a pretty hefty amount of juice to do that. Let's look here. Last up on the odd block. Staying in the medical realm, this is Medtronic PLC. They make a lot of medical devices out there, trading 118.63 right now. Ticker symbol MDT. For those of you out there who don't watch the med device sector, it's up about $1.25 today, about 1%. This is the name that a year ago was trading about $87. So they've had a nice, decent rally-ho year. That's pretty much what the chart has been. A few valleys in there, but for the most part, it's been slowly to the upside to pretty much where it is right now, right on the 52-week high. The 52-week high is actually 119.30, so we're a little bit shy of that, but pretty much right at it. So let's see what our Eye of Sauron found for us out here today. We found, looks like some April upside love, Mr. Rock Lobster, but doing this for a little more upside love, but for a much more reasonable outlay. 3,500 of the Ape 130s going up for 65 cents. Right near the offer. These things are about 50 cents wide. Go figure. There's not exactly a huge options name. So they're gobbling these bad boys up on the Philly. There are earnings coming up. The earnings are on February 18th, so a little bit of earnings juice baked in there as well. Total, though, a lot of going up on the day. Total, as of the time of our Eye of Sauron flag, there's a total of about 13,000 had gone up on the day. So somebody's really liking these Ape 130s, which is, given this chart, that's a pretty fair run you got to make to get up to 130. This thing's been moving, but it's been kind of a long, slow, steady rally over the course of the past year. It's got to run another 12 or so handles to get up to these things by April. That's a pretty sharp run. Granted, he's not paying a boatload for it. He's not paying $265 like our other friend out there. But still, that's a big move this guy needs to have happen, Mr. Rock Lobster, for these bad boys to pay off. So what's your take on our final name here, these Medtronic Ape Upside, sir?
Let's see here, 65 cents. Well, as Mr. TOSAW would say, I'm invoking TOSAW a lot right now just because it's fun. It's making me happy just to invoke him because I know a day like today, he's invocable. He's
I'm very invocable.
He's very invocable. It's a bull day. He's been bullish. You got to give the guy some credit, although I haven't really disagreed with him on the bullish thing. I'm going to say it, this is a bull market. This is a bull market purchase, right? Like stuff that you're like, no way could that ever get there, right? And you remember being on the floor and you sell some calls. You're like, these are rip-ups. No way it gets to 130 by April. And then lo and behold, by mid-February, it's trading 145. And you're scrambling to buy all the stock you can so you don't have a miserable day. So I just look at it. You look at it, and it's made a pretty good power move over the last month. It's made a pretty good move over the last 6 months. So is there anything else in that? Certainly possible. So, I think good old-fashioned spec, option implied volatility, 1-year lows, you're seeing a lot of this everywhere, which is why it's harder for it to get lower than it is right now. It doesn't mean it can't. It's just, to take that next leg down is not easy. And as I say that, everything's kind of ticking down a little bit ball-wise. So I just think, it's a bull market strategy. I like the fact that they're doing it in April and they're not doing it in, February. I think you got a much better shot because, more time means more. I think it's probably one of the better bull market trades is 4 to 6 month calls. They don't really decay and they're relatively easy to manage and hedge in the short term. So, and there's a lot of, again, bull market. So this is not an unreasonable call purchase, even though it is, $12 out of the money, but that's nothing in a bull market, which apparently that's what we're in.
Apparently. So we're going to put this as the whiff of someone who maybe thinks they know something about this name. So we're going to put this one in the to be watched category. Come back to MD. We keep cleaning out that cup and it keeps filling up again. So we got a couple more to watch here today. And we got to watch some of you guys now. It is time for the mail block. All right, everybody. Welcome to the mail block portion of the show where you guys take the reins, your questions, your comments. So kick this off with this one. I like this. Remember last time we got together, Mr. Rock Lobster, what did we call the show? The Ticks of VVIX, right? That was our theme for the episode. Chinook sent in this great gif of this dog, and his eyes are just twitching. And he said, listening to the option block and watching the VIX gives me ticks. And his just eyes just ticking, and it just brought a smile to my face. It was hilarious. So well done out there, Chinook. I'm just looking at that image right now, and it brings a smile to my face. All right, let's see what else we got in store for us here. Bill, the creatively named Bill. I love our audience. They're so polite. They send in stuff, and they say, can you please go over this by a certain date? So, we're nice. You sometimes takes us a while to get to questions. We have so many, but if you have a specific date in mind, we'll see if we can accommodate you. So Bill says, hopefully you can go over this next week. Before January 23rd. Well, it is January 16th, so you made it under the deadline here. Bill, he says, asked about ticker NLOK. He says, aka this is the old SYM, so this is the old Symantec that he's talking about. Okay. It says NLOK is paying a does he mean $12? Maybe it does. 12, he doesn't have any notation on it. Let's assume $12. That sounds fun. A $12 special dividend with an X date of February 3rd. So why are the puts so cheap? If the stock is around $26, wouldn't the 25 or 26 put be selling for a lot more than $1 if we assume the stock will drop by $12 after the X date? Thanks. Well, let's pull this up. This is not a ticker that I play around with quite a bit. I remember the old Symantec, but this new, I guess they did some, they think they got taken over or merged with Norton over there. So yeah, this is the new, and LifeLock as well. This is the new Norton LifeLocks. This is like 5 companies all rolled into one. I think they changed and merged last year sometime. Yeah, and saying here, on January 9th, they announced its directors declared the unusually large special dividend of $12 per share that will return $8 billion collectively to shareholders. So he is on to something here, that there is a crazy dividend. This is not a name. We're going to pull it up, do some on-the-fly analysis. First off, one of the first things everyone should do when you see something like this and you have a little question in your mind of like, hey, this is weird. Is there perhaps some other thing I'm missing? One of the first things you should do on these corporate actions is go head on over to OCC and type in your ticker to see if perhaps there's a circular around that symbol that maybe they're doing some sort of special adjustment as a result of a corporate action. So I am going to do that right now while we keep doing that. Meanwhile, I don't know, Mr. Rock Lobster, do you want to try to regale, what is his name, Bill? Or maybe Mr. Uncle Mike, whoever wants to have at it while I look up this ticker here. Why you think what's going on out here in, what is it, ticker NLOK? Is this one either of you guys trade? Maybe your crazies trade in the pit chat, Mr. Rock Lobster?
I don't. I just know Symantec, isn't it they're kind of like a utility, right? With all the security, everybody computers, you just pay them the security fee every year. And
yeah, it's stuff you get installed for free on your computer, that you try to uninstall very quickly.
Yeah, so somehow they make a lot of money. But with a special dividend, like if you go to the OCC, they're just going to adjust the strikes. So like Mark said, with a corporate action, $12 special dividend, they are going to readjust the multiplier in the strike to compensate for the dividend. And there was a time when they didn't do that. And we call it the Microsoft rule. There's actually an old Option Pit blog that I wrote a long time ago about it. And, everybody, because a lot of people would be like long call, short stock or something, and Microsoft paid a huge dividend, a $3 dividend. Everybody was surprised, like they'll never pay a dividend. And, like the liquidity provider community just got drilled, and some hedge funds too, got drilled on that position because all of a sudden they just lost $3 there, and there's nothing you can do about it. So now the OCC, like anything that's outside of a normal dividend raise for a company, they will adjust the strike. So that's why the puts are not showing that. What will happen is they're going to pay the divvy. There's going to be an old NLOK and a new NLOK. And the old NLOK is going to have this crazy strike, and it won't make any sense, and you'll think it's all free money. And then you go put on some crazy trade in a liquid stub, and it'll make your life miserable. So at this point, you buy the stock, you get your $12 dividend as long as it's before the XD date. I would assume that NLOK would have a new price that's a lot lower afterward, and you move along. So the option market, there's not that same worry when they have a big dividend as there used to be. And there's a lot of corporate actions like that. Takeovers with stubs and things like that, a lot of tender offers. There are opportunities, I would say, in tender offers for stocks where you tender some shares and try to get a better allocation and get some goodies because not everybody that tenders actually gets it. So, again, corporate actions are a little goofy, but in a straight div, they just adjust the strikes, and you don't get anything for free, unfortunately.
Yeah, there's no free lunch out here. I'm looking at the OCC doesn't have the circular up yet. The most recent one they have on NLOK is about the symbol change back in November when they obviously did this Norton Symantec LifeLock kind of merger takeover thing. So they don't have the adjustment up yet, but that's clearly what's going to happen here. So yeah, everyone, I saw when this question came in, we looked up the dividend and saw these people tweeting on message boards like, this is free money, let's get these puts. Yeah, that's unfortunately not how this works. I remember, Mr. Uncle Mike, do you recall there was a similar situation back in the day around the OX acquisition? OX had a pretty crazy special dividend, and everyone and their mother was hitting us up like, what is going on? Is this free money? Do you recall that one, Mr. Uncle Mike?
I do, and it was one to where this was after my employment with Options Express had ended, but I do remember that, and excuse me, it was, I believe the stock was around $19, and they declared like a $4 dividend. And then magically, probably a few months later, they sold to Schwab. So it kind of makes you think that maybe at that point the shareholders are like, well, we know we're going to be selling to Schwab in a little while.
Let's pay ourselves some money
right now before we sell. Yes. So that kind of makes me think that's what happened. I was not in on that board meeting, and I was not employed with the company at the time. But just saying, that's what I think may have happened.
Yeah, that's the last time I remember someone hitting us up with this extreme of a it was obviously less, but still. Yeah, unfortunately, what was it, Bill? Yeah, no free lunch for you, sir. Keep an eye on OCC. They'll probably have a circular out soon about that. All right, let's go up. This is right up your alley, Mr. Uncle Mike. I like this handle, too. Paul M. Paulino. A lot of Pauls going on there. Paul M. Paulino says, hello. Well, hello, Paul. He says, what is the option strategy I can take if the call option I bought does not go as projected? That is, the stock price goes down instead of going up. I think we were picking up what you were laying down there, Paul M. Paulino. He goes on to write, other than selling to close the call option, is there another action I can take to avoid the loss? And when can I hear your answer? Well, you can hear it right now, Paul M. Paulino. I just like saying that. But yeah, this is, Mr. Uncle Mike, this is kind of a frequent refrain. He's losing money on his calls, but he doesn't want to sell them. He refuses to sell and take the loss. When you have a client who comes to you with this kind of complaint, I got this calls, I bought them, they're in my face, I can't sell them, I can't take the loss. What do you usually counsel them, Mr. Uncle Mike?
Well, hey, yo, Paulie. I couldn't wait to say that. Sorry.
It's a fun name, isn't it?
It really is. It really is. Well, there's a couple of things. First, let me give you the smart aleck answer. Only do it if you know the stock's going to go up. There's the smart aleck answer. I got that out of the way. But there are a couple of things that you can do on it. It's probably not what you want to hear if you're currently in a losing call option. But here's some ways with which I think you can remedy it in the future. Some of the things that I do whenever I buy a call option that I think that the stock's going to go up, and if my plan, in case it doesn't go my way, the most important thing that I do is, I'm actually kind of doing it right now, is have a very limited amount of risk in the first place. So in other words, if let's say you have a $10,000 trading account, and instead of putting all $10,000 into this call option that you like, maybe put in $1,000 into this call option that you like, and then when it starts to go against you, bail on it. That's probably the best thing that you can do for a call option. The only other things that you're going to be able to do are make adjustments that require more money. And so, in other words, let's say the stock's going against you or the time decay is going against you. You could buy more calls and then it goes up just a little bit and then you make your money back and you're out. But keep in mind, the argument against that is that you're throwing good money after bad a lot of times. And if it continues to go against you, you're just risking more money. So there is no way to save it unless you want to add more money to it. The thought of maybe turning it into a spread, the only time that works, my opinion, is if you have a sudden drastic increase in volatility. Now, that's happened to me a couple times. If we were to normally I say if we were to go to war with Iran or something like that, but I can't really say that anymore because it really doesn't even affect the market. But let's say we did have some type of crazy event to where all of a sudden the S&P is dropping 100 points and the VIX goes over 20 in a day. Or on days like that, some days you can buy calls, market keeps going down, and then vol keeps going up so much that the call that's even higher than the one that you bought has such a vol spike that you can sell it and create a free call spread. I mean, you can do that, but that happens once every 3 or 4 years. So ultimately, the best way with which to do it is to take on a small amount of risk in the first place and say, you know what, this call's going against me, but I'm okay with it because it's limited risk and I don't have a lot of money on the table in the first place. That's the best thing I can tell you because there's no other way to adjust it without putting more money on the table.
Yeah, people the other guy wants his free dividend lunch. This guy doesn't want to take a hit on. Sometimes you got to take your lumps on this one. Mr. Rock Lobster, I got a feeling some of your crazies in the pit chat have asked a question similar to this over the years. What do you have to add for Mr. Paul M. Paulino from Sopranos fame?
Mr. Paulie Walnuts. So what I would say is if you buy calls, clearly you think the stock is going up, right? The second thing, if you buy calls, that means you think the stock is going to go up between now and expiration. So what I do mostly when I just go buy calls, I will buy some puts at a place that automatically stops me out. So I decide that I will spend $1,000 on this idea. That is all I want to spend. So you can do what Mike says and say, okay, the stock pulls back and I'm stopped out and that's it. I don't want to spend any more. Like $300 or $400 of my $1,000, I'm out. If I decide, let's say my number is $1,000, if I buy a strangle, like what I would call like a long delta strangle, I know that my stop area is going to inflect at one point where the trade stops losing money from the call and starts to pick up more money from the put, and I'm stopped out at that price. But the dollar amount that you put in is I actually look at what the decay will be and what the net will be as the stock pulls back, and you're going to lose some money, right? Because the stock could just pull back a little bit. Not really enough for your put to kick in, but it just decays and it just sucks. That can also happen. So you have to decide how much money that you want to spend on that. So especially at Option Pit, because I'm not a full-time trader, I'm just a part-time trader like everybody else. If I'm going to buy calls, I will buy a put on some sort of stop for the premium. And if I know I get to that point and the stock keeps going down, I know at least I'm stopped out and I've only lost X number of dollars. And then I just close the trade whenever. So that's how I would do that. And I usually give myself a time frame. So the way to do that is you plan each piece of the trade. So I have what I'm going to spend for my calls and puts, how long I can be in it and be wrong, and what that date is and what the trade is going to look like. And that gives me my exit. So you're essentially stopping yourself out without doing anything. And a lot of what makes me get into a long call, if I think a stock can go up, is what that protection or hedging actually is going to cost me. So that all goes into the calculus before I enter a long call. I know that might sound overly complicated, but I don't really like using call stops because it gets you out of crappy times. And if at least you're stopped with a put at some level, you kind of know where you're going to be. You're sort of pre-stopped at a limit. And ultimately, when you trade, when you're long options, that's about the best you can hope for if everything goes wrong. Just it's taking you out at some spot, and then you're done. So you just have to get into your head that you have to be very tight with what you allow yourself to lose. Because if things go right, that's not a problem. And if it goes really right, that's also not a problem. It's how much it's going to cost you if you're long. So I would look at it from that point of view, and that's what I do on when I buy calls like that.
I think what we're all saying here, Paul and Paulino, is you got to plan this stuff ahead of time. You can't just buy the call and then have it go against you. Now what do I do? Oh no, the sky is falling. You got to have those plans in place. Like the Rock Lobster, he's buying puts ahead of time. You could go with stops, like they're kind of hit or miss, like the Rock Lobster alluded to, Uncle Mike way. You know, as long as you have some plan in place ahead of time, and once it goes against you, the horse has already left the barn, unfortunately. Before we roll on really quickly, I love our listeners. They're a savvy bunch. We got Stadini in the chat saying MDT Medtronic, the name we were just talking about. They just got a 130 price target by some schmucks. Yes, most analysts do fall into that schmucks category. He actually clarifies. It says it's UBS, so that probably explains the call purchase. Yes, it does. The 130 strike, someone obviously out there is buying what that analyst is selling and putting a lot of his money behind it. 13,000 contracts as of that trade time. He's putting a lot of stock in that analyst's call. I think we all know the view we take here of analyst calls on the show, but still, someone putting a lot of the money where that analyst's mouth is. Another reason for us to come back and check in on this as we go into our final segment. It's time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, let's go around the horn, see what everyone's got their eyes on for the rest of the week until we all can gather here together again on Monday. Let's start with you, Uncle Mike, sir. What are you watching the rest of the week into the weekend?
The S&P 3300, it's kind of interesting. It's like the S&P is above the 3300 level, but SPY is struggling to get through 330. So just kind of watching that, seeing if it's a mental number for the marketplace, and then also watching the Dow, watching the numbers, watching the tweets, watching the earnings, watching good stuff right now. And hopefully we don't have to watch more huge wars.
Look at you watching the Dow.
Or some huge wars, I should say.
You're the one guy watching the Dow. It's you. You're the reason I keep caring about the Dow. It's because of you, Uncle Mike. I blame you for the persistence of the Dow. Mr. Rock Lobster, same question for you, sir. What are you watching, aside from VIX and spikes, inexorably moving closer to my prediction for tomorrow, sir?
Yes. I see. I think I have a good shot at that one. But as of right now, not there. Getting close. That's pretty much it because earnings are coming out. Well, I got all the tech earnings next couple weeks. We're in that wait and see mode, and let's see if we can make new lows for vol and the market. You know, if you like being short vol, this is a tough market because vol is so low. So, let's see if it gets a little lower. I don't think it gets a whole lot lower, but this is the level where it has bounced pretty consistently for the last year. So. Well, we have a trade deal signed, so that's the difference. Let's see if we can make a new law on that.
All right, listeners. Unfortunately, that music means we come to the end of our journey, at least on the option block. If you're saying to yourself, I need some more, don't worry. got you covered. You can get a whole bunch here if you're listening live because you're going to get in between. Maybe we'll put some fun stuff and maybe a little bit of boot camp. Boot camp is back, at least for the time being. So enjoy that. That'll be maybe in the interim. Then we'll be back in exactly half an hour talking a lot of fun stuff. Hey, the new Bitcoin options launched on CME this week. We'll get some fun analysis of that, maybe with an old friend or two. We shall see. As well as some other fun stuff, in-studio guests and more. TWIFO coming up in pretty much exactly half an hour. But before we go, let's go back around the horn. Check in with each of our cohorts, see what they have to offer you. Mr. Rocklopster, let's start with you. Let's say I missed your grand webinar this week, sir, but I want to get myself some of that option pit learning. Where should I go? What should I do?
Surf on over to optionpit.com. Also, check out our Sharp Bets page for really excellent trade ideas every week with write-ups and videos on how to do them, how to analyze options, how to create trades. So surf on over to optionpit.com and check it all out. And that's about it.
Sharp Bets. If you too want to be sharp, optionpit.com, the place to go. Mr. Rocklopster, I already talked to Rocklopster. Mr. Uncle Mike. If I want to be sharp, perhaps with my financial advisor, maybe I want to call you up and say, I have these calls that are moving against me. What should I do? How should I reach out? How should I contact you?
Call me, contact me. My information's on my website at stcharleswealth.com. More than happy to talk with anyone, even if it is about bad call luck.
So if you have wealth and you're in St. Charles, those are only two people who can reach out to him. Everyone else need not apply. I am just joking, of course. All are welcome. stcharleswealth.com is the place to go. And on behalf of Uncle Mike and the Rock Lobster and indeed myself, I'll thank you all for downloading, streaming, subscribing, for listening live. If you are listening live, stay tuned. We have some fun stuff coming for you, and we'll be back in half an hour. If you're listening after the fact, like most of you are, hey, just hit next on your device of choice. We'll have more stuff coming your way. We'll be back here tomorrow live, 1 p.m. Central, with the Spikes father. We can explore why there is this kind of dichotomy between Spikes and VIX right now. A lot of other fun stuff on the docket. And, of course, we're back right here. Actually, no. Monday, I do believe, is a holiday. So we might not be back on Monday. But we will have some crypto hitting the network for you. So look forward to that. And we'll be back at our usual appointed time, this time next week, for more of the Option Block.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.